Ladies and gentlemen, good day and welcome to Rallis India Limited Q1 FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gavin Disa from CDR India. Thank you, and over to you, Mr. Disa.
Thank you. Good day, everyone, and thank you for joining us on Rallis India Limited's Q1 FY25 earnings call. We have with us today Mr. Gyanendra Shukla, Managing Director and CEO, Mr. S. Nagarajan, Chief Operating Officer, and Ms. Subhra Gourisaria, Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available in the results presentation. I now invite Mr. Shukla to begin proceedings of the call.
Thanks, Gavin. Good morning, everyone, and thank you for joining us today on our Q1 Fiscal Year 25 earnings call. As mentioned by Gavin, I have alongside with me Nagarajan, our Chief Operating Officer, and Subhra, our CFO. Let me begin the discussion by getting into the industry landscape initially, post which I will discuss Rallis' specific developments. On the industry side, we have seen an early sign of demand recovery after a long time. All of you know that a couple of years have been a little bad. In domestic markets, there's a positive sentiment primarily driven by monsoon prediction of IMD. There was a deficient rainfall till June 24 that did impact Part1 Fiscal Year 25 sales. But off late, monsoon has started really picking up well, and the Kharif sowing is registering significant growth, about 10% compared to last year. If you look at key crops, paddy is about 21%, soybean is about 30%, maize is 34%, and pigeon pea is about 191%. This is one crop has seen significant increase in acres driven by commodity prices. From field reports, what we are hearing, cotton acreages have reduced significantly in northern part of India. There's one particular pest called pink bollworm has been bothering the farmers. However, on the export front, recovery remains soft. Because key markets like Brazil, US, FCA, all they have. So while volumes have started picking up, prices continue to be depressed due to oversupply from China. We think with the ongoing season in the northern hemisphere, including US, should lead to some balancing of the inventory, and hopefully things will start looking positively from there. Coming to Rallis' specific developments, we have started the year with overall revenue being flat. It's an overall number when you compare with the last year, but there are some, I would say, green shoots there. So, for example, our domestic crop care business has delivered a positive growth. And seed, as we had indicated in the previous call, we had supply constraint. As a result, we had to take the degrowth. And crop care, I think, is largely domestic as well as international business. As I said, continues to remain under pressure because of the price. EBITDA for the quarter stood at rupees 96 crore. It is lower by about 13% compared to same quarter last year, with gross contribution margin of 30%. And PAT for the quarter stood at 48 crore compared to the 63 crore reported during Q1 of Fiscal Year 24. Getting more specific about the individual businesses. So starting with domestic crop care business, crop prices are relatively better, particularly for pulses and oil seeds, and favorable monsoon was the primary growth driver for the business. Input prices were relatively stable during the quarter, which in turn resulted in better margin profitability for the business. In terms of product categories, I think I had indicated in the last call, herbicide is one area which is growing faster, driven by the labor dynamics in the country, has performed well for us. Having said that, I think we still have a gap in our herbicide portfolio, which we are working on. On the back of it, crop care delivered a strong volume-led growth. of about 8%. Growth was good in both domestic crop protection and crop nutrition business, with year-on-year price drop impacting growth. Now, as we see domestic market, I think prices are stabilized, but our strategy is to continue to grow the business with more thrust on developing differentiated product. We are improving our front-end capabilities based on the theme of customer centricity I talked last time. And as we work more on this, you will start hearing more about this as we move forward. Our endeavor will be to build a more connected organization leveraging digital. I think digital will give us a scale, and that's where we'll get closer to the customer. We have also progressed well in our supply chain management strategy, linking demand and supply planning with SAP IBP going live. It was just launched in the month of August, so work is still going on, but this will help in driving efficiencies on all the fronts. Crop nutrition had a very good quarter, and we had a growth of roughly 31%. As it was informed earlier, we also commissioned the water-soluble fertilizer plant during the year. The crop nutrition, as I mentioned last time, is continuing to be our strong pillar for the long-term growth, and we'll continue to invest in this segment. Coming back to international business, our revenue stood at 133 crore, which is lower by 5% compared to the similar period last year. Though we had a decent growth of about 19%, but the price challenge are really impacting overall growth from a revenue perspective. We have some old products like acephate, hexa, and pendi, where prices continue to remain muted, with metric prices actually are almost at the level of half compared to what they were 2 years ago. On the top of that, sea freight has also seen a steep hike, as Baltic dry index has doubled over last year, impacting margins. In terms of our key products, acephate continues to face challenges in Brazil and US. Pendimethalin operated at low capacity, but we are confident on long-term product of this technical. So we are more optimistic about pendimethalin related to acephate in the long term. And metribuzin and hexaconazole exhibited a steady traction in the US and Southeast Asian markets. We also progressed well in terms of commencing new relations with global majors for some of our old technical. In contract manufacturing business, we are also working on expanding formulation alliances with global players to build a more resilient portfolio. This will help us improve the capacity utilization of our state-of-the-art manufacturing facility in the chemical zone in Dahej. We are confident that this business will meaningfully contribute to both top line and bottom line in the years to come. So that's on the chemical side. Shifting gears to seed business. As I earlier said, look, we had a seed supply shortage in several crops. And as a result of that, our revenue has dropped by 16%. But with the prudent cost management and pricing, we have been able to improve our GC by 4% compared to similar period last year. We also have invested in technology, a tool called SeedSay, which uses AI and ML forecasting abilities to really ensure that optimal placement is happening in the market. I am also very happy to report that Diggaz, the hybrid cotton which we had launched in the north, has seen a good volume growth, and this is on the top of that with significant lower cotton area planted in northern part of the country. As far as other crops are concerned, the liquidation trends are satisfactory, as rains have picked up everywhere almost now. In terms of our long-term strategy for the business, we are on the right path with the sharpened portfolio choices and driving sustainability, profitability, with measures being taken across the value chain. In conclusion, I think near-term outlook for the business, particularly international, remains challenging, at least for the next 3 months at least. However, domestic business with the rain and the commodity prices being good, looking positive. We are very confident and optimistic about the overall growth prospect in the medium to long term. Furthermore, our efforts are now directed towards improving, as I said earlier, customer connectivity, leveraging digital, sharpening product portfolio choices. And when I said last time, I really meant that, look, we are going to work more on a differentiated product, also going to phase out some of the products do not make money, are too small, and they bring supply chain complexity. We are working on new partnership and alliances to build, renew our portfolio. That concludes my opening remark. Now I'll hand over to Subhra, our CFO, for a detailed analysis of the financials. Subhra, over to you.
Good morning, everyone. I'll quickly walk you through financials, and after that we can start the Q&A session. Our revenue stood at 783 crores as against 782 crores for the same period last year. Volume growth was encouraging at 9%, but price challenge, especially in international market, impacted the overall growth. Also, as Mr. Gyanendra alluded, supply challenges and fees have impacted the growth in the business. EBITDA for the quarter stood at 96 crores against 110 crores for the same period last year. Profit PAT for the quarter stood at 48 crores against 63 crores for the same period last year. In terms of domestic business, crop care business, it had a good growth of 13%. Due to poor Rabi crop, we had high trade inventory, which also we corrected during the quarter. However, now we believe sentiments have improved with new MSP and monsoon progressing quite well. As far as seeds is concerned, we did well despite reduced cotton acreages. We have made calibrated placements considering the inventory level, and I'm hopeful that our liquidation trends will be better. International business, the high inventory and benign prices continue to impact sales and profitability. In terms of performance for key technicals, Mr. Gyanendra already spoke about. We are working on expanding our customer base and product portfolio to build a more resilient business in this front. Our efforts continue to be directed towards driving focused execution, both at the front and the back end. This includes portfolio optimization, territory rationalization, removing overlaps wherever it's there, and looking at driving cost efficiency and simplification across the value chain. Our actions around portfolio refresh continue, and we have launched 5 new products in crop care and 14 products in seeds during the quarter. We will continue to be relentless on improving capital efficiency, both for working and fixed capital. We do have a very healthy cash balance as of 30th June as well, and with no external borrowings. Our CapEx, we are also very prudent in CapEx investment and envisage that our spend will be in the range of 100 crores. In summary, we are implementing various initiatives in our drive towards achieving consistent, competitive, and profitable growth. That concludes the remarks. We can now start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. A request to all the participants, kindly restrict to 2 questions per participant and join the queue again for a follow-up question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Raj from SIMPL. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just a couple of questions. First, on the gross margin. See, you talked about an increase in prices in seeds and cost management. So the margin in seeds is quite healthy despite the drop in seeds. And, if one looks at the growth in B2C business, one would think the overall gross margin per se for the company as a whole should be better. But so, the question is that, is it that the international business is making a negative margin or a loss in this particular quarter? So, and if you can just give some perspective, what is driving this loss? Because if I look at other industry B2B players, they are seeing an improvement in margins and recovery in sales as well. But for us, it seems, if we kind of dissect, it seems the business has incurred a loss, the B2B business. So that is one.
Viraj, is there any other question or should we respond?
Can we just start with this?
Okay. See, gross margin has come down not because of international business making any negative margin. So we didn't make negative margin in international business. We have mentioned in the earlier calls that we were taking swift actions in terms of liquidating old inventory. Overall spreads has indeed compressed, and hence the margins are lower than what we have made historically, but we have not made any negative margins. The overall margin compression has come, because the mix has overall every year Q1 seeds is a larger proportion of the portfolio, and seeds mix has come down. As you would have seen, seeds has had a negative growth compared to crop care. So while the mix is positive in terms of domestic crop care versus international, it's adverse in case of seeds. Secondly, certainly in case of domestic and international, the relative margins are relatively poorer than the historical margin. Does it help answer your question?
No, see, if you look at seeds margin per se, right, you did around 22% EBITDA margin in seeds as against 20%. So it dropped hardly 4 crores on a year-on-year basis. So even if you adjust for that drop in sales and seeds, you've kind of done a far better job in terms of managing the profitability in seeds. In domestic, if you look at, the environment, the RM prices are many. So you're reporting a very strong, healthy volume growth. So one would think that, the overall margin, either at the gross or the EBITDA level, would be relatively better. But that is not the case. So, the only thing which adds up is either the loss or the sharp compression in international business. So that's what I was just trying to come from. And the related part was in other expenses also, you've seen a jump from 125 to 136, while sales is largely flat. So any one-off there?
Yeah, so let me first give you my perspective on this margin. So obviously seed we are up, and as I said earlier, we're going to be managing seed for profitability. Now, when it comes to B2C or B2B in crop care, you have to understand that for us to significantly move margin, when I'm comparing with company A, B, C, D, we have to see the product mix they have or we have. We are a company where our herbicide portfolio, which really for most companies in quarter will comprise most of their sales. Herbicide is one area where I would say we are not very strong. So that is something as we work on portfolio in herbicide, I think that will start changing. Even so I think it's always a combination of what product mix I have got and what others have got. So we are aware of this fact, and I think our attempt is to start looking at portfolio and start cleaning up so that we are continuously improving our margins, and that will only come from portfolio churn. And portfolio churn, it's a phase out process. It's not a start and stop switch.
On the other expenses, sir?
So the other expenses, Viraj, has gone up, one obviously because we spoke about the contribution to EG, electoral trust, and there is also an element of increase in freight and some investments that we have done behind digital sitting there, including migration to SAP HANA.
Okay, just one question if I may. If I look at 2024 as a whole, in the annual report also we talked about around 30 crores of investment in P&L from digital or IT spend. So, can you elaborate how are these helped or we expect to help either in terms of better sales through the cost efficiency, and how should we understand this run rate going ahead?
Can you just reiterate your question?
So, if you look at in 2024, in the annual report, we talked about 28 to 30 crores of spends in the P&L towards digital and IT spends. So, idea was to understand, how these spends are helping us either in terms of better sales throughput or cost efficiency. So, if you can give some examples, and if you can also help us understand how should we understand this run rate of spends, going ahead.
So if you look at all our digital spend, actually you can categorize into five categories. One is obviously backend is very, very important, which is SAP S4 HANA, where we are going through complete changeover of our ERP system. That obviously takes time and money. On our other efficiency related, we are building a tool called Drishti, and I think it has been talked about in the past, and that's where we're trying to develop how can we use AI and ML technologies, leveraging satellite data, etc., to help farmers warn about flooding, drought, pest sprays so that they can optimize, uses of the chemicals on their crop and hence benefit. Because unless farmers make more money, none of the companies are going to be successful. Other things are really our channel focused, where we call, so we are investing a lot in really getting visibility. One of the challenge we and the industry faces is once product moves from distributor to retailer, there's hardly any visibility, and that shows up in the form of return at the end of the season. So there's something called Anubandh. Right? It's a program we are investing in. It's again digitally enabled to really two things. A, we start getting better visibility of what is happening at the channel level. One more step down beyond distribution. Another also thing to expand our footprint of retail so that we are reaching to the unreached customer. The other areas where we have seed say, where we're trying to use planning tool to really say how we should plan and how much we should plan, and we're trying to work on some of the leading indicators to really understand how much placement we should make of the seed, because seed is one category. If you place too much, if it comes back, it also leads to a lot of write-off. And the other thing is really another tool which is more related to production planning, tracking, improving the efficiency, seed sure. So there are 4-5 initiatives, and I think 6th one which I have been talking is really customer connect, because so we're trying to look at a lot of internal things. So from a company perspective, strong ERP is important. Then we have done something which are related to production and tracking and retailer distribution, and now we're talking about customer. So I think as we look at as we move forward, digital investment is going to further go up, because we would like to understand customer, and it's very, very important to understand your business to get lead indicators ahead of time, because that helps you in planning and forecasting business there. And the other one we probably have not talked about it. I think manufacturing is one area where we are also evaluating various options and what kind of required automation we can bring, and that can bring efficiency and timely delivery, because everything is very, very important. So we're also looking at automation in manufacturing, and that has not been done yet. But customer and manufacturing automation are two focus areas. Others have started, will continue to improve and invest in those areas. But these two are going to be fresh investment.
Also to add, Gyanendra, we also have last year, since the reference was about last year, we had invested in a supply chain tool as well, SAP IBP integration called Plan Guru. We're branding it as Plan Guru internally. And of course, that is something that will help us in better forecasting, better logistics. So the question of how it will help us in improvement in operating efficiencies, we believe that this can actually help us in managing our stock flows much better, and also be able to respond to demand changes that inevitably happen during the course of the season in a lot more agile fashion.
I mean, in nutshell, I can tell you. So, for example, this year nobody would have thought the farmers would not plant the cotton in north. Such a significant drop will happen. In some of the areas, actually drop is to the extent of 50%. So, what are the things we can do digitally to connect with the market better and can get some leading indicator to manage business better? I mean, pulses going up, tour planting going up by 200% is something very unprecedented. Because land is limited in the country, if they are growing so much of one crop, that means other is going to suffer.
Thank you very much, Viraj. A request to all the participants, kindly restrict to 2 questions per participant and join with you again for a follow-up question. The next question is from the line of Darshita from Antique Stock Broking. Please go ahead.
Yeah, hi. Thank you for the opportunity. The first question was regarding the supply constraints that we've been seeing in the seeds business. If you could elaborate a little bit on these supply constraints, one, and two, when do we expect this to smoothen?
So, seed supply chain, if I may say, is very complicated. What I want to sell in 2025, for example, I should be taking production this year, right? And parents of those seeds I should have produced in 2023. So it requires 2 years of planning. So that's one, and you need to have enough parents to produce. The second thing is seed production. For majority of the crop we are dealing with happens in the Rabi season of southern India. So most of the seed is being produced in Andhra, Telangana, and a little bit in Karnataka, Maharashtra, and Tamil Nadu. Now, last 2 years have seen significant drought right from the month of September all the way to November, December in this part. So there were 2 years where there was excess rainfall, planting got delayed, and then last year was significant water shortage. As a result, farmers decided there was a competition for what you call seed crop acres. So those are the things led to really less production. The other thing is we are also becoming, we are raising our bar on the quality standard, because in seed, so when seed comes back, you have to test it and check it for its integrity from a purity and germination perspective. So all those things also sometimes lead to these shortages. Now the other thing is, this is one category where either I keep too much of inventory, right, in anticipation of demand, which also means I lock in working capital for a long period, which I think is not desirable. So we're trying to fine tune in such a way, and my colleague Nagarajan mentioned about some of the tools we are using to really forecast demand and produce accordingly. So it's a combination of things. It's a complicated supply chain. I think we're just trying to manage it, the whole business for profit, rather than trying to say, we'll just shave the volume in this, because seed inventory can come to haunt us, very badly. It all becomes write-off.
Got that. Second one was, it was a clarification. I think Shubha ma'am mentioned that we have seen a margin compression in the domestic market as well. Did I hear it correct?
Yeah, relatively, yes, you're right, Darshika, because also I said that we corrected inventory from Rabi, and Rabi inventory gave higher margin for us. In terms of the Kharif placement, we are well on track in terms of the margin as well as the plan that we had. But now monsoons picking up, hopefully the liquidation should be improving.
Thank you very much. The next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah, good morning, and thanks for taking my questions. Maybe just start with a couple on the seed side. Would it be possible to give us some flavor of the crop-wise breakdown of the seed business? Just rough numbers would also be great. And in terms of the YOY growth or the decline that we've seen, is that coming primarily from the non-cotton category? How should we think about that? Thank you.
So if you see our business, the two areas where we had supply challenges primarily was hybrid maize as well as hybrid paddy.
So cotton was indeed actually, Abhijit, North cotton we said we had very good momentum. South and West cotton we have to yet see how the liquidation progresses, but it's not a big part of our portfolio. So paddy and maize were the bigger dippers for us.
And they are a significant part of our revenue.
Yeah.
Okay, understood. And just in the context of this pink bollworm infestation in the north, what's your early sense about how Diggaz and your other hybrids are sort of, coping with the challenge of the pest attack over there? Do you see them sort of withstanding the attack and thereby maybe generating better demand for next season from the farming community?
So I think it's a very, very difficult situation for the farmer, because each company has a common denominator of Bollgard 2 gene as their technology platform. So seed per se cannot control pink bollworm, right? So whether it's Diggaz or anything else, any competitor product. What we are looking at is because our seed in last 2 years has performed very well in the farmer's field. In the comparable situations is always relative performance. Everybody has pink bollworm issue. I think what we're trying to do, our team is on the ground, and we're trying to really educate farmers what kind of strategies they can adopt from crop protection perspective to save their crop. And every company is trying to do that. But given everything else being at par, I think Diggaz has performed well.